SimilarWeb is a new addition to the basket of companies that we track on the SaaS report. So let's do a quick recap on them before we go through their numbers for Q2. So SimilarWeb is a kind of digital marketing insights platform that provides intelligence around kind of website and app user traffic and provides other things like keyword analysis, competitor analysis. One of their competitors, their major competitors, is SEMrush, who we covered on last week's pod. So SimilarWeb went public in May of 2021. Very early in today's standards, they were only doing around 100 million in ARR at the time. Fast forward to today and they're at 234 million in ARR as of Q2. That gives them a compound annual growth rate of about 30% since they IPO'd. Right now, that's not ideal for a company in kind of the low hundreds of millions in ARR. They're going to want to be growing much faster than that. And the story kind of gets even worse for them when you look at Q2 growth rate. That came in at just 17% this year. So in the last 12 months, they added 41 million in net new ARR, and they spent about $112 million on sales and marketing to generate that growth. So that gives them CAC payback of 41 months and magic number of 0.37. To add to that, they also saw worse kind of business efficiency over the last year. So operating margin was down to negative 10% from negative 2% a year ago. Free cash flow margin was down as well. That came in at 4%. Compared to 10% last year. Now that comes about due to big investments in R&D. R&D spending as a percentage of revenue was up to 26% compared to 20% a year ago. Rule of 40 came in at 21. Rule of X came in at 38. So they're in a bit of a tricky spot. Not a lot going right for them at the moment. They're trading at a market cap of 742 million, or about 2.6 times Q2 ARR.